Everyone was expecting India's central bank to cut interest rates back in October. But what they did instead was, well, way more dramatic. We're going to unpack that bombshell and figure out what it all means for the economy heading into 2025.
And yeah, that quote pretty much sums it up, right? The markets were all set for a straightforward rate cut, but the Reserve Bank of India, the RBI, decided to throw a major curveball. It's a move that shouts confidence for sure, but it also completely changes the rules of the game.
All right, so first things first, we're going to break down exactly what the RBI announced. And maybe even more important, we're going to dig into the why behind this really surprising move.
So let's just get right to it. What were the key figures that came out of this big policy meeting?
First, the big one. The repo rate, that's the main interest rate the RBI charges other banks, was held steady at 5.50%. No cut, no hike, nothing. And that right there was the first clue that the RBI was playing a whole different game this time around.
But at the same time, get this, the RBI showed some serious optimism. They actually raised their economic growth forecast for the fiscal year all the way up to 6.8%. That signals some real confidence in where the economy is headed.
And here's the other piece of the puzzle that makes it all possible. Their inflation forecast was revised down to just 2.6%. When prices are under control like that, it suddenly gives the central bank a lot more breathing room to focus on the big picture instead of just fighting fires.
And just to wrap up the key stats, the official policy stance is still neutral. Plus, there is more good news. The current account deficit, which, in a nutshell, is the difference between what India earns from the world versus what it spends, got way smaller. All these things kind of set the stage for their decision to just hit pause.
So this brings us to the million-dollar question. If inflation is so low, why not just cut rates? Give the economy a little extra juice. Well, the answer is a bit more complicated than that. See, there were a few things going on. Yeah, inflation is low, but the government is already giving the economy a boost. The RBI is also keeping a close watch on risks from overseas. But the real reason for the pause, and this is the key, was to clear the deck for something much, much bigger. This wasn't a pause because they were nervous, it was a pause to get ready for a massive shift.
And that brings us to the main event. Honestly, the interest rate decision was just the opening act. The real story was this huge wave of regulatory reforms they announced.
And we're not talking about small tweaks here. The RBI rolled out 22 separate measures. The goal? To basically reshape the entire plumbing, the fundamental infrastructure of India's whole financial system. It's incredibly ambitious.
So let's just quickly run through the 5 biggest changes. First, they're letting banks finance corporate takeovers, which is a big deal. Second, they're easing the rules for lending against stocks, which could pump a lot more cash into the markets. Third, making it easier to fund giant infrastructure projects. Fourth, simplifying a ton of complicated foreign exchange rules to make doing business internationally way easier. And finally, taking real steps to make the Indian rupee a more global currency. I mean, any one of these would be a major story. All at once, it's a total overhaul.
But a move this big doesn't come without risks. And that brings us to the central theme here. All these new reforms are forcing the entire financial system to walk a very, very delicate tightrope.
This really lays out the two sides of the coin. On the one hand, the potential upside is just massive. We're talking faster credit growth, a boost to markets, and a stronger rupee. But on the flip side, the risks are just as real. Will these easier lending rules lead to more bad loans? Could it create dangerous speculative bubbles? This is the financial tightrope the RBI has to walk now.
Okay, so with all that on the table, what should you and I be looking for in the coming months? Let's highlight the key signals that are going to tell us which way this whole thing is heading. Here's your cheat sheet. First, all eyes are on the December RBI meeting. Do they finally deliver that rate cut then? Next, you got to watch credit growth and bank asset quality like a hawk. Those are the canaries in the coal mine for the system's health. And of course, keep an eye on how the markets, bonds, stocks, the rupee are actually reacting as these new rules start getting rolled out.
And that leaves us with the final, absolutely critical question. The RBI has placed a huge bet on bold reform over slow and steady caution. But is this the launchpad that sends India's financial system into a whole new orbit? Or is it a high-stakes gamble that could overextend it at the worst possible time? The answer to that is going to define the next few years.